October 19th, 1987. A date that didn't start with sirens, but ended with silence. On Wall Street, the ticker tape froze. Traders stood frozen. Phones rang with no one to answer. The Dow Jones had just lost 22.6% in a single day. The worst crash in history. In a single day, $500 billion vanished. What caused this crash? That's not a typo. 22,6%. In one day, not over weeks, not months, just hours. And when the dust settled, $500 billion in wealth had vanished. Over $1.3 trillion in today's money, But here's what's even more shocking. No one saw it coming. No war, no recession, no oil shock, just panic. A perfect storm of computers, fear, and flawed systems. So how did the most powerful financial system in the world collapse in a single Monday? Who were the players behind the scenes? And how did America, yes, America, pull itself back from the edge? This isn't just a story about stocks. It's about technology, psychology, and the resilience of a nation. Get ready, because today we're reliving Black Monday. The day Wall Street blinked. It wasn't one thing that broke the market. It was five, and they all collided on the same Monday. First, skyrocketing interest rates. Just weeks before, the Federal Reserve, under new chairman, Alan Greenspan, had raised rates to fight inflation. That made bonds more attractive, and stocks less so. Second, global markets were already falling. The UK, Germany, Hong Kong, all down 10% or more. When New York opened, it was already behind the curve. Traders panicked. If they're selling, we sell too. No analysis, just fear. Third, program trading gone wild. Banks and funds used a new tool called portfolio insurance. Computer programs designed to protect investments by selling automatically when the market dropped. But on Black Monday, these systems triggered a domino effect. Sell, drop, sell more, drop harder. Fourth, illiquidity. When everyone tries to sell at once, there are no buyers. The ticker tape fell 2 hours behind. Real time. Orders piled up. No one knew prices. It was financial chaos in slow motion. And fifth, human psychology. After weeks of volatility, nerves were shot. One bad headline, a trade deficit report, was enough to push traders over the edge. They didn't wait, they ran. Alan Greenspan later called it a cascade of selling, but it wasn't just selling. It was a system-wide failure, where technology, policy, and emotion collided. And when the market closed that day, one question echoed across Wall Street: will there even be an opening bell tomorrow? The morning after Black Monday, Washington was in crisis mode. The new Federal Reserve Chairman, Alan Greenspan, had been in office for only 2 months. His first test, preventing a total financial meltdown. And his move was bold. He spoke. In a rare Sunday statement, Greenspan declared, "The Federal Reserve will serve as a source of liquidity to support the economic and financial system." In plain English, we're not letting this fail. It was a promise, backed by the full power of the U.S. government. At the same time, John Phelan, president of the New York Stock Exchange, took radical action. He suspended trading for key stocks. Not a shutdown, a reset. He gave brokers time to regroup, to find buyers, to restore order. The Treasury Department, led by Secretary James Baker, and a David Mulford, coordinated with central banks in London, Tokyo, and Frankfurt. Within hours, they agreed on joint liquidity injections. It was the first truly Global financial rescue, led by America. Banks reopened lines of credit. The Fed pumped billions into the banking system. And the message was clear. This wasn't just about saving Wall Street. It was about protecting pensions, savings, and trust in the American economy. No bailouts, no taxpayer money used, just liquidity, leadership, and nerve. Greenspan didn't hesitate. Phelan didn't panic. They stood in the breach and held the line. And by Tuesday morning, something incredible happened. The market didn't crash again. It didn't soar, but it stabilized. In the words of one trader, we got our breath back. By the end of October 1987, the Dow had lost nearly the 30% from its peak. Economists predicted a recession. Headlines screamed, Great Depression 2.0? But something unexpected happened. The economy kept going. Consumer spending didn't collapse. Corporate earnings held. And by December, the market had already recovered 40% of its losses. By 1989, it had fully erased the crash and kept rising. The reason? America didn't just wait for recovery. It built safeguards. The SEC and the Fed created circuit breakers, automatic pauses in trading. If the market dropped too fast, like seatbelts for Wall Street. Program trading was reined in. Exchanges improved coordination, and the Federal Reserve cemented its role as the lender of last resort in, not with money, but with confidence. This wasn't luck, it was resilience. A system that, despite its flaws, had deep structural strength, diverse industries, strong institutions, and a culture of innovation. Companies didn't stop investing, workers didn't stop earning, and investors, once burned, came back, but smarter. They learned volatility is normal, panic is optional. The crash of 1987 didn't break America, it tested it, and the system passed, not perfectly, but powerfully. While headlines focused on Greenspan and Phelan, hundreds of unsung Americans kept the system alive. At the New York Stock Exchange, floor traders worked 18-hour shifts, matching buyers and sellers by voice, paper, and instinct, even as the ticker lagged 2 hours behind. At the Federal Reserve Bank of New York, operations teams manually processed emergency credit lines, ensuring banks could keep lending. One manager later said, "We didn't sleep for 3 days, but we weren't going to let the country down." SEC analysts worked through the night, tracking the cascade of automated sales, identifying flaws in portfolio insurance systems. Their reports became the blueprint for reform. In Chicago, IMM traders held commodity markets open, preventing a domino effect into agriculture and energy. In Washington, Treasury staff coordinated calls with Tokyo and London, ensuring global liquidity didn't freeze. These weren't CEOs, not celebrities, just professionals, calm, trained, and deeply committed to the stability of the American economy. They didn't seek credit, they didn't want medals, they did their job, with quiet courage because someone had to. And that's the truth about America's financial resilience. It doesn't depend on one genius or one policy. It depends on thousands of people doing the right thing, under pressure, without applause. The crash of 1987 didn't just vanish. It left scars and safeguards. Today, every major stock exchange in the world uses circuit breakers, a direct legacy of that Monday. When volatility spikes, trading pauses, not to stop the market, but to save it. Algorithmic trading is now monitored in real time. Central banks coordinate globally. And the Federal Reserve has a playbook. Inject liquidity, restore confidence, lead, all born from the fire of 1987. This wasn't a failure of capitalism. It was a stress test, and America passed. We didn't hide, we didn't blame. We fixed what was broken, honored those who stood firm, and built a system tougher than before. Because that's who we are. When the market crashes, we don't run. We rebuild, with better rules, clearer vision, and the quiet certainty that no storm lasts forever. So ask yourself, what would you do if the market crashed tomorrow? Would you panic, or would you trust the system and the thousands of unseen hands that keep it running? If you made it this far, you're not just watching history. You're learning how to survive the next crisis. And that's the greatest edge of all. Like this video, hit like, and comment, what's the next crash no one sees coming? I read every single one. Subscribe and hit the bell. Because next week, we're going deeper into financial history. 1998. When Wall Street saved. Wall Street. The fall of long-term capital management. One hedge fund, $4 billion in losses, and a secret Fed meeting that saved the world. Until then, stay informed. Stay calm, and remember, the strength of America isn't in its markets. It's in its resolve to rise after every fall.